Hey Phil, you have me muted.
I don't see anybody viewing. It does show us live though. I don't know. There we go. Somebody's coming in now.
I should just said Trade Genius, right? There it
Yeah,
is. Got it.
just
Got it.
go
Got
to.
it. Got it. I'm good. Trader Joe's advertising on our site.
I don't know what that means.
When we go live, somebody's ad is in front of our podcast.
Oh, cool. That's really nice.
Hey guys, if you're listening and you get the ad, just click on it so I get more money. Then don't go with them. Yeah, I'm gonna check the comments out here. So, all right, we got 62 watching, Phil.
All right, so we've had our initial announcement, and so we're gonna just wait for the presser. But the initial, obviously, well, if you haven't heard, they've held, which we expected. So the key now is going to be, do they cut in September? And if they do cut in September, then I think we're probably going to see this market go up into that. So we just have a chart here with some moving averages on it that are somewhat key in terms of this range that we're in. And we're going to see how I think the most important part of this is ahead of us here when they start the presser in about 20 minutes. And we'll see the reaction in the markets at that point. But key for the bulls was to get above this daily 50 and this daily 9 EMA, which they did. We were doing a lot of choppy chop in here, which you see a lot of times when the market's trying to make a bottom. And ultimately, we want to get back above the 20 SMA up here, which is up at 55.90. But clearing 55, this getting back into this purple zone was important. So we're going to look to hold that area, hold above the daily 9 now, and this market should be a happy camper. Also, you want to
Yeah,
hold over these highs that were made in here above 55.30. So we're not
yeah.
out of the woods yet, but it looks good.
No, XFix is rolling, so that's what I'm watching. Eli, really don't do anything until Phil puts out for you guys. You get a kind of initial range, and then you got to watch to see which way it breaks. So, cause you get a move, then a fake move, then another fake move. So you just kind of got to wait till it breaks a range. Phil will walk that range out for you guys.
Yeah, so this is our initial. So what we can do is just delineate when the announcement was.
So Nvidia had a big move already too, guys. But if it breaks this cap it's under now right now, the move is to about 122. But yesterday we caught the long. We were actually short, long, and stayed long overnight. So I'm already out. I don't want to keep biting from that apple in case Powell does stupid stuff.
Yeah, so we're just kind of in this drift here until Powell starts to talk.
Yeah.
Your high and low, your range high and your range low have been somewhat established here already.
Hey Phil, how much time do you give that range? Just 5 minutes?
You have to kind of give it the into the presser. This is a little more aggressive in that they're pushing up into the initial reaction range. Usually you get a reaction range and it'll consolidate into the presser. Then during the presser, you'll get a break one way or the other on that. And then whichever side breaks first, we typically give more weight to that's the overall direction. But when it breaks, you should, it should be a clean break, a strong break.
Yeah, they definitely front ran it, Phil. So we're just going to have to wait to see what Jay Powell has to say. Guys, get comfortable. Just keep an eye on SFIX. If it does what I think it's going to do, it should climb right back to 50 here in the next 2 weeks. So that should always be your go-to trade on a buy to dip, SVIX or SVXY. If you like puts, UVXY puts. So people are asking about GTPC launch of Bitcoin. I don't know what that means.
Um, I don't. What is it?
I don't know. Just that was a question exactly as they said it. Any
Um,
thoughts on GBTC launch of BTC? So I don't know what that means.
maybe they're talking about the spot ETF.
Yeah, probably. Hey, Clint, JPY strengthening is because inflation's out of control. So they have to keep raising rates now. Eventually, it's going to be a disaster for the U.S. markets because the Japanese will repatriate all their assets back to Japan. So if it keeps going like that, you're welcome, Sean. Yeah, Phil, I think after Jay Powell's done, we should probably be green today, tomorrow, and Friday beyond where we are now.
Grayscale launched the mini trust of BTC, yeah, and it's much cheaper rates than the GBTC fund that we've had. So they were thinking that was affecting the discount to NAV, which the discount on GBTC dropped after they went live with the mini BTC fund. All right, so we poked a new high over the reaction high. A lot of times, what we'll end up getting is, and if we don't get it, it'll be very bullish. But a lot of times, what you'll get is something like this, and then you're going to get one pull back into the announcement area, and then something along those lines right there. You know, might take more time to play out, but we're looking for basically a 50% retrace inside the reaction range. And when this pulls back, it kind of looks like things are falling apart there for a bit. But it's just really just a trailing stops getting hit and things like that. But a lot of times it will not go deeper than that. Now, if it breaks the reaction low, that's an outlier. Jerome Powell will have to say something very hawkish to kind of scare the market. At this point, you really don't expect the reaction low to get tagged. Usually, once it's committing to one side, it takes off. Because and normally we don't push up before the presser. So, like I said, this is a little unusual that it's continuing to be bid here. I think the market's basically convinced he's going to be hawkish. We're going to get a September cut, and I think everything moves up into that first rate cut myself. Not in a straight line. You're going to have probably a pullback between August and September, but ultimately that next Fed meeting in September, I think is, especially if we're bidding up into it, maybe a sell the news event before we get a final push up towards the election. There's going to be an ad running, so I'll let that run and we'll be back. This thing gives us a heads up now when the ads run. Yeah, I do think we're going to see 100K BTC. I do. But we're going to see higher most likely. But in terms of like that happening, the market does need to start moving pretty quickly. So in the next 2 weeks, I think we should move up quickly. And because Trump is like the crypto candidate, you could see kind of a dynamic where, polling numbers could be, the price of Bitcoin could be very sensitive to the polling numbers. And maybe, BTC starts pricing in, a Trump win if he's ahead in the polls and things like that. So you could have all kinds of market dynamics that start to develop the closer we get to November 4. If he looks like he's going to win, I could see BTC doing a blow off move into that. And then I think we're going to have a much earlier cycle top because of the macro situation with jobs and things like that. And just, we haven't had a recession in 15 years. That's not normal. So a lot of indicators are saying that market's rolling over, or the economy's rolling over. Net liquidity looks like it wants to give us a risk on signal. So that's probably going to happen this week or next week, which will be bullish. Our yield curve is actually going back down. So for me, the yield curve the market could continue to party as long as the yield curve is negative. So we can continue to see highs. This is kind of a projection of when the yield curve hits our recession threshold and starts to go really positive and steepen. We should start to see the market decline during that time. Bitcoin was badly lagging the tech, the NASDAQ 100, and that was at our most recent lows, and we were pointing that out and saying that we're probably gonna have a snap back up, and these things are gonna meet back up, because normally when they get divergent like that, where Bitcoin's lagging it and tech is running, then Bitcoin runs up. So maybe everything syncs up now and we get this big blow off move that we're talking about happening.
Yeah, I'm keeping an eye on oil. So
No, Bitcoin would most likely start ripping from here into the middle of August, would be my guess. For equities, seasonally, that's what happens in an election year too. Very strong move from here into the middle of August. And we have options expiration next month. Probably we end up seeing, let's see, it's going to be the third Friday. That's the 23rd. So we could run up into that week of the 20 from August, what would it be? The week of August 18th through the 23rd. That's where this market probably would exhaust into if we did get a strong push from here. Yeah, David B, I think that ship has sailed. Now you can get you could get a move down after, if we go into a fairly long recession, you could definitely see another bubble burst. And even if we go up into six figures, it could come way, way, way down. And I think that'll be your next low. And hopefully you guys can accumulate one BTC. This is just a daily chart of SPX, and you can see a big jump up here. We may hold, this gap might hold for a long, long time because we're getting back over these previous highs. What we don't want to see in the market is one of these deals where it then starts to roll over, because then what happens is you get a big old head and shoulders formation. And head and shoulders is bearish when it looks like this. And then you break this neckline and see you later. That's all she wrote. So we don't want to see this roll over. If we're going to get this move up and make a lower high, then typically what we would look for is this zone up here, right in here. So for SPX, we're looking somewhere between 5560 and 5600. That would be our spot where if this market's only going to make a lower high, then as you guys can see, we don't have much higher up to go, and that's it. Otherwise, if we blow through these levels here back above 5600, then we're probably gunning for the new highs and making a higher highs and potentially squeezing up there into August, September. This is our Ranger. This is our part of our basic package. This is our Ranger buy zone. Whenever we get into the daily Ranger buy zone, we look for swings out of that. And we hit that again, and we're getting our swing out of that. So looking to target back up. This is on the futures, so the prices are a little different, but we're looking to push back up into this 5600 area, 5630 to 5707 on the futures to challenge that. We had a swing high up here at 5630 approximately. So on the futures, that's kind of a key level to get back to. We also have on the futures, they gave us a gap that back on July 23rd. So when the futures market went and closed on Friday and reopened on Monday, they gapped it down. And it's usually they usually don't leave a gap in the futures like that. They usually close them. So my immediate target for this move is 5602.25. And I think we're going to go up here and close this gap. A really strong candle today. So that's your immediate target right now, is 5602.25 on the futures. And futures are trading at about a 30-point premium to the S&P 500. So that means we'll probably see something like 5730 on the excuse me, 5570 on the S&P 500. These are some VWAP levels. Our quarterly VWAP is up here at 5584.75. That's another immediate upside destination. Bitcoin is trying to hold over Monday's low. Monday's low is a critical spot for BTC. We do have one of our sniper signals that we have. That's one of our indicators. If Bitcoin can push over Monday's low and gain some traction, we'll probably head higher. But been really volatile in this range here. Lots of attempts to break out right up into 66,750. Somebody's been sitting up there preventing Bitcoin from moving back. So we'll see if that can continue to compress into that level. If they do, and we start breaking out over the daily envelope high, we'll probably greenlight and move back up to 70. All right, so we now have the presser should be starting soon, and we'll see what we get here for more headlines.
Most of the Mag 7 are hitting resistance areas here. So probably a big front run they did. Entity looks promising. NVIDIA just popped another buck. SFIX is on a grind.
So the Fed said it does not expect it will be appropriate to lower rates until it's gained greater confidence inflation is moving sustainably toward 2%. So the Fed essentially is, of the stance so far in their comments that they are wanting to see more progress on inflation. So we're going to see now what we're going to see is if we can get any kind of, clues that they're going to cut in September. Now he's speaking now. There's the link for the presser. I'll shout out kind of what the main points are. So this is just a bit of a short squeeze here. Hedges coming off because he hasn't really said a whole ton of things yet. Powell says labor market has come into better balance. He's attentive to risks on both sides of the dual mandate. The pace of spending has slowed but remains solid. Powell says recent indicators suggest the economy has continued to expand at a solid pace. Powell says recent indicators suggest the economy has continued to expand at a solid pace. Pace of spending has slowed but remains solid. Let's see what else here. That's so far, those are the main points. We'll see what else he says. He'll probably speak for about 10 minutes and then he'll go into Q&A. So looking at when we watch price action here, that previous high at 55.71, obviously a bunch of stops are hit here, right? We'll look and see if that traps. If that traps, we could get somewhat of a pullback. I would look for, something in here for a pullback. If it's really strong, we'll only get back to this range reaction high. Powell says the data suggests that the job market is strong, not overheated. Data suggests that the labor market has returned to where it was on the eve of the pandemic. A broad set of labor market indicators shows it is strong but not overheated. In the housing sector, investment stalled in the second quarter. Let's see what else here. That's it for now. So either we're going to hold here at this previous high or we're going to start getting stops hit, and we may see a pullback to clear out some trailing stops. If we do, watch, like I said, we're going to watch this area for a bounce. Inflation remains somewhat above the 2% goal. The longer term inflation expectations appear well anchored as the labor market decline goals in better balance. We need greater confidence on inflation. All right, so here is a bunch of stops getting hit. So we're back to the range reaction high. If it's very bullish, that will hold. Otherwise, we may get back down into where the announcement was. There's a bigger dump.
SVIX keeps moving higher though.
Powell says we'll carefully assess incoming data for future decisions. We need greater confidence on inflation. So, we're looking for dovishness. They're kind of acting like they're not committing to any rate cuts just yet. Got to be, data dependent. So then it's a matter of, does the market really start pricing in on the Fed funds futures if they start pricing in that September cut? Now he says reducing too late could unduly weaken the economy. So that's dovish because he's acknowledging that they can't just sit there and be hawks the whole time. So we're having a decent reaction off of that range that I highlighted in here. Talked about this being a dip zone, and we got that reaction. We're back over the reaction high. So if that holds, then I suspect we'll start grinding higher unless Jay Powell says something crazy. Powell says that there's a broad sense that at the FOMC we are moving closer. If labor market weakens, unexpectedly ready to respond. And that's basically what it is with the Fed and their cuts. They're very beholden to the job market, right? That's one of their mandates. So I think personally, as we progress through Q3, that the labor numbers are going to weaken significantly enough that we will see a cut in September. So we could get into a situation too where when we get labor numbers that come in, right, like this week is a lot of job numbers, and when those start to come in weaker, bad is good in terms of the market reaction because they want to bid up into a rate cut. So bad job numbers are going to increase the likelihood of a rate cut come September. So that's probably the dynamic that we're going to be dealing with as we progress towards September. Powell says the Senate committee moving closer to cutting rates. If inflation is to prove sticky, we'd weigh that in our decision. When asked about a September cut, if inflation moves down in line with expectations, growth remains reasonably strong, labor market remains as it is, rate cut in September would be on the table. All right, so that's the clearest they've been about that. He didn't say it's off the table. He says that it's potentially on the table. That, I think, is what the markets have been looking for, a positive reaction off those comments so far. So if you get deteriorating job numbers, if you have inflation starting to continue to not bounce back up, then you're probably going to get it. But I think jobs will be the primary factor in that, unless inflation really just started pushing up. But if you think about it, you're probably not going to get a big spike in inflation if jobs are starting to roll off. I mean, there are some lag effects to that, but I suspect we're probably going to see a cut just because of everything. All right, so there's a nice push up off those comments. New high, that's exactly what you want to see if you're going higher. So again, guys, what we saw, right, we had a push up over our reaction. We talked about this pullback into this zone that you typically get, and just very textbook reaction. So I think based on what we're seeing, because it's textbook and assuming he doesn't say anything outlandish between now and the next 30 minutes while he's talking and stuff like that, we're probably going to continue to grind up, and everybody that's been bearish on this thing is going to have to start covering shorts. Where I would say that that is invalidated is if we take out this swing low, we start trading below the announcement, and especially if we take out that reaction low, that would be an outlier compared to how these things normally behave. So you broke the high, you took out a previous swing high. You've now taken out the initial push up, which was the short covering squeeze that we got up here. So these are all, we're making higher highs here. So things are going up. Momentum is up, yada, yada, yada. Powell says, I can imagine a scenario of 0 cuts to several cuts this year, depending on how the economy evolves. So I think we've had press conferences where he's said outright, don't expect any cuts until 2025. Now he's open to several cuts this year. So personally, I think if you read between the lines on the Fed, that they are bracing for a recession, in my opinion. Powell said a rate cut could happen as soon as the next meeting. So there's your dovishness. That's what the market was looking for, and we're seeing that reflected in the price here now. Now, in terms of bigger levels and things like that, like I said, we have this gap up here. We need to get back to the gap. technically that gap closes at 5602.25. So when the futures closed for the weekend, so this was this was actually an intra-week gap, which is even more rare. So we were closed on a Tuesday. We opened later because during the week, the futures closed for an hour from 5 p.m. Eastern to 6 p.m. Eastern. When we opened down, 9 times out of 10, they're going to run up and close that gap at some point in the next few hours when the session reopens after 6 p.m. In this particular instance, they didn't do that. So these are areas you mark off because they're a huge magnet. So I suspect that if not today, overnight, we're going to get back up into these levels, 5602. So now we do have the daily 20 SMA here. That's a huge moving average. But typically when we're in an uptrend in the market, I'll go to the daily chart here. You know, you see we get these periodic pullbacks, right? And when these are like your larger pullbacks that you get once in a great while. Otherwise, we tend to get high and tight in the market, and that 20 SMA acts as good support. So if you get a dip to that, you know, that's generally a decent bounce. Unless you get these larger breaks that lose it, it turns into resistance, and then you get a final flush. I believe that's what we saw, and I believe this market was intending to go down into this FOMC rate announcement, because now we're going to go into a very seasonal bullish time to the middle of August. I mean, this candle's already taken back better part of a week in terms of, you know, the down pressure. So this market can scoot very quickly, but because we're under the daily 20, that is the next big level that we have to get back over. You can see when we lose it, like here, you know, you get back to it and it can reject. So we're not totally out of the woods. We need to see a strong candle reaction back through it like we got back here. So that's the next hurdle. But we could close that gap even though it's over the daily 20. And then we look at that like an overthrow. And when we get those overthrows, sometimes they'll fall back under that reference level that we have. Here's another time where we lost the 20. Right, you come back up, you back test it, rejection. This was a longer pullback. This one came up, we actually came up over it, rejected off the weekly 9. This is a different situation now because the weekly 9 is actually under the daily 20. If a pullback, it's like this reaction here, right? If we get a pullback, and the pullback is going on for a long time, then the daily 20 is under the weekly 9. But if it's just getting started, then the daily 20 is above the weekly 9. So our current situation is most like this, and so that's why we have to watch that reaction there at the daily 20 when we get it. Similar to this, you'll see we lose the daily 20, come up, right? We hit it, and we do overthrow it, right? But we have that inverted hammer candle, bearish, and then we reject. So could get a rejection there. If we don't get a rejection there, we just get a nice clean move through that, then this market is going to absolutely go bonkers. It's just going to squeeze. This is a very, very strong move. So, but we could overthrow, close this gap, and then pull back. So that's the initial target. If we start clearing this, then we can look to buy once we clear and get some acceptance back over this area, back over the daily 20. Then you can look to get long and gun for these upper levels. So daily 20 is here, and our gap fill is here. So Mr. Bitcoin's doing. So this is our Monday low. The Monday range on Bitcoin is very relevant. So we're trying to establish acceptance over the Monday low. And that's important because then we can gun for the Monday high, which is all the way back up here, up to 68.2. So what you get when you get acceptance back into Monday's range, you're looking for that entire move back up. So that would target 68.244. No, my bad. Monday's high is way up at, my bad. I was reading that wrong. 70,000. That's Monday's high. So that's a big move. Big move. And that's why we look closely and watch to see if we can get acceptance over that Monday high, because essentially what you're looking for is this hold and then ultimately getting that Monday high. It happens a lot. Big range rotation. Essentially what happens is all these guys get trapped, and eventually you get a large rotation back up, and then you're going to get a bunch of people stuck up here and stops hit and things like that. And part of what makes this happen too is shorts start to unwind as well. We had sniper buy. We had one of our Discord alert channel buys down here as well. And so look for that to continue. This is on a 1 hour, this is on a 4 hour chart actually. So this 4 hour signal just fired. We had one earlier in the night on the hourly back here, right into the Monday low, but it's so far has been holding. Essentially, we look at these as telling us, hey, there's cycle lows happening here. So next hurdle to get over is going to be this Ranger sell zone, 68,000, and then I think we're going to see that high up there and attack that weekly high and attack that Monday high. That's usually how these things go. Next up too for Bitcoin is the daily envelope high, which is yesterday's high, 66,988. We start clearing that, flipping that to support, then we'll start working our way up. Okay, getting closer to the daily 20 EMA. We'll watch for the reaction there. I'm sorry, daily 20 SMA, not EMA. Okay, Powell's talking again. We are now getting broader disinflation. In a base case, you would think policy rates would move down from here. We don't need to be 100% focused on inflation. It's coming to the time to adjust rates to support our continued progress or process. All of the data continues to point in a direction we want to see. We're actually in a good place here. We're balancing risks. If we see a significant downturn in the labor market, then we would respond. So again, when you see job numbers, bad news is good news for this market. And it's going to be like that up until the first rate cut. We're now getting broader disinflation. So took him a little bit, but he got to the dovish part of his statement. So now it's just going to be about grinding up. I think the move has established itself, right? Definitely and we usually what we say is once you get a strong reaction beyond the initial reaction, you're likely to see this is going to broadcast your broader move higher, right? So obviously we've got some hurdles to get over. And we could even see going into tomorrow, potentially a pullback from this first retest or back test of the daily 20 SMA. But I would be of the mind that you're going to be in a dip buy mode on that. If it's really bullish though, we'll just have a huge daily close over this and we don't really get back under it. It's just that probabilities say that when you get back to your first test after losing that daily 20 SMA, you are going to see a reaction down. So I'm thinking we fill the gap. It's an overthrow. And then we get a pullback that goes into possibly tomorrow into Friday maybe. But then if we get back up here in that scenario and we break through the daily 20, I wouldn't fade that at this point. I'd be full on like in the mode to buy.
SVIX is ready to break 45 now, guys. So we're full on vol crush. Nvidia's at 118 now. ExxonMobil 119.45. Shoot, I missed my snow trade. I think I may jump it anyway. So, Phil, we got a lot of resistance here. If it breaks through, we're going to have a jailbreak on some of these tech stocks.
Yeah, I think it would be more fun if it just blows through this level. But you do have to be cognizant of the fact that we may get a pushback initially, and it's like one red day, for example, and then it pushes back up.
Yeah, I agree. Usually, if you get a big move, the next day it is opposite reaction. That's why you just can't go crazy.
Powell says certainty is not a word that we have in our business.
Yeah, how about idiocracy?
Well, I think the market. I haven't seen the Fed funds futures in terms of what they're pricing in for September. I would think though that it's gotten a lot better, and it's going to continue to get a lot better if jobs continue to deteriorate. We do have more job numbers coming out tomorrow and on Friday, I believe. Today we had Jolt's job openings. That was expected to be 8 million, 8.02 million. We had 8.18 million. So there was more job openings. Consumer confidence was a beat. ADP non-farm employment change was a miss. Employment cost index was actually a little bit under one. They were forecasting 1%. It came in at 0.9%. So that's good for inflation coming down. Chicago PMI, which isn't a high impact news item, came in a little bit better than expected, or higher than expected, I should say. That's a little inflationary. Pending home sales month over month was expected to be 1.4%. We got 4.8%. So that's very good.
Derek and Pete, I told you SVIX will pass.
Tomorrow, we have unemployment claims. They're expecting 236,000. And then at 10 a.m., we have ISM manufacturing PMI, which is inflationary number. Then on Friday, we have average hourly earnings month over month, non-farm employment change, and unemployment rate all at 8:30 a.m. Eastern. So that'll round out the week. So again, poor job numbers will continue to bid this market up.
And if you guys watched our podcast yesterday, the numbers are horrible. They can't hide it. It's a slow grind into oblivion.
Market cap on Nvidia went up $440 billion today.
Yep.
These numbers are just bananas.
And about 10K of it went into my pocket. So thank you, whoever was short. And those guys that aren't listening, if you're in the VIP room, you would have caught that trade with me, by the way. You would have paid for 20 years of the payrolls of our service.
So for Bitcoin, it's holding higher lows. It's making higher highs. There's a lot of congestion in here between 66,700 and 66,800. So we need to see them clear this area here. And if we get this area to clear, we should be off to the races. That's the current battle. we're coiling here, guys. Basically, putting in a bull flag, right? If you you guys don't know what a bull flag is, essentially, you're just looking for a flagpole and then a flag formation like that, and you dance around in it and then break out higher. And we're looking for gap fill right now. That's our target. Overthrow. This is a major level, right? The daily 20 SMA is a major level.
Mm. Nice moving ulti today.
Powell says there was a real discussion about the case for reducing rates at this meeting. 19 participants supported the decision today. We get a lot of data between now and September. Upside
They're
risks to
cutting it.
inflation have decreased as the job market cools. Downside risks to employment mandate are real now. Okay, so
They're
that's what I
cutting in
mean.
September
If the employment numbers start to suck, we're going to get that September cut.
for sure.
Interest rate futures prices rise as Fed chair speaks. Traders add to bets on Fed rate cuts. Yeah, but what's September pricing in now? That's the question.
Uh, ExxonMobil's earnings are on Friday, so I think they're going to try to tag the all-time high here, and then we'll have to see if we get a breakout. I got a measured move to 151 on ExxonMobil over the next 3 to 6 months. So, FYI.
Okay, we continue to coil here. And Bitcoin is too, even though it doesn't look like a bull flag, but when you start to compress price up into resistance and it compresses and compresses, then a lot of times you're going to get that breakout move. So we could see a large short cover move up into the daily envelope high and higher. This is an hourly 144 SMA. We start getting back above that, we should start filling out the rest of that Monday range. But it looks pretty constructive. ETH, USD, let's see if Ethereum's getting its groove back. Yep, similar story there. Needs to start clearing this 33.30 area. Pushing back up here on ES. And on unrelated news, reports of an explosion was heard northeast of Baghdad, Iraq. So things have been heating up the last couple of days over there. Treasury 5-year yields fall to session low of 3.99%. I think you're going to continue to see yields fall, and that's typically what you see before recession. They'll start to lead down. Bonds will trade up with the market, and then at some point, bonds continue to bid up. Market decouples from the move. All right, so we're just watching to see if we can get this bull flag to break out. Otherwise, if this pullback doesn't hold, then you have to look at this prior high here to potentially get tested at 55.71. Would backfill some of this breakout that we got here.
Hey, Phil, oil's up $3.37.
I wonder if that's just related primarily to kind of the escalation we're getting between Hezbollah and Israel and Iran.
I would think so.
You know, they went in and assassinated the head Hezbollah guy inside Iran.
Yeah, the Hamas chief.
Iran is saying that Hamas chief's killing had U.S. involvement. There's all kinds of saber rattling going on. It doesn't surprise me that oil's catching a bid.
It's okay by me.
Now you got bombs going off in Iraq.
Yeah, the guy made a mistake. It was pretty funny. I was watching this morning. He went to an inauguration of the new president and said he was chanting "Death to America, Death to Israel," and somebody put a caption on, "This morning Israel and America are still alive, but Hananea is not."
Yeah.
Remember, these are the clowns that killed. I was in the Marine Corps when the barracks went up, and so my unit rotated back 2 weeks before. So the people that replaced my unit, some of those guys got killed, and they sent 2 people in my unit back to Beirut after that. I didn't go, and so pretty wild. So, and I didn't know the guy from Beirut was the head guy that they did it. All I know is that Uncle Ron parked a battleship and took out the Syrian High Command in the Shuf Mountains after that. So, but these people over there are crazy. I mean, it's 40 years they've been fighting this thing. 40. Like, I lived that long. I guess they just got tired of them.
Yeah, getting a little bit of a bid back here on ES or the S&P 500. I noticed you guys were asking or talking about Wolf. We can flip over that chart really quickly. And just, bigger picture daily chart stuff here. Similar to, actually, similar to what the stock market did. Pulled back into the daily 50 SMA, broke the weekly 9 SMA. So it essentially is following the market. So if the market, we expect to potentially push up here into the middle of August. Remember, that was the plan all along with Wolf, is ride it up into the middle of August and then see where we're at. I think it was Cantor Fitzgerald have a price target. It was either them or Vanguard has a price target on Wolf of $10. But yeah, we're looking to, obviously a huge move off the lows, right? 300%. So yeah, you're going to get a pullback. If we pull a fib from the low, if you pull a fib from where the move started, we're in the golden pocket, right? The 50 to 618. So your fib extension on that is a target of $7.58 on the 236, or the 618, $9.26. I think both of those are doable. Okay. But this is the part in the story where you want to see price really start to accelerate. Don't really want to see it dilly-dally at this point. We have this huge daily gap. And this is, I've been talking about this from day one, that we have to, technically the gap closes at $7.88 and you start filling it at $6.75. So this is a major area that I think is going to be, as we get back up to these previous highs, is going to be a major magnet in filling this. So that is currently what we're gunning for. So we get your A move, you get your B move pullback. We're looking for a C move to finish us off into this. This moving average is the weekly 200, which is, that's a huge moving average in equities. So it's up there as well. Makes a lot of sense for price to try to get up there and finish the job. So from here, I think that's your trade. We do know from the volume leaders chart that there is just a ton of institutional volume that came in between $4 and $4.50 in that zone. We pulled back into that zone and bouncing right back out of it, almost like they wanted to time it with an FOMC pivot, right? Usually these are not coincidences. So I think it looks good. Look for these lows to hold, and we can start on our C leg on this ABC pattern.
NVIDIA is breaking 119 now.
Okay, let's get back to business here. So back to our 5-minute chart. Again, we're still starting to fill out this, or still filling out this bull flag.
Yeah, I think CrowdStrike is in a position now to get a bit of a bump here. I'm going to probably go for it.
There's a ton of resistance here at 55.80. Tons and tons of resistance. This needs to start, getting back up and breaking out, or you're going to lose the bull flag structure. And then it's just going to look like we're going to just reject off that 20 SMA.
It was a big move.
Personally, I will say that you can get back to this 55.70 area, this previous high, and you're going to want to see a reaction there back up. Otherwise, you have to step back and say, well, maybe we're just going to reject off this 20 SMA. We're not going to get this gap fill, and they're going to leave that for another time. These are all possible. You just have to kind of adapt to what the market's given us. Powell says the time is approaching for a rate cut. Yeah, so there was a huge blast that rocked Baghdad. That wasn't a rumor, that is confirmed. Iraqi security forces have been deployed onto the streets of Baghdad and at key points around the city. So I don't know if it was suicide bombing. Don't know if it was an airstrike. No idea. But things are escalating in that region. Funny how that happens ahead of an election.
Yep.
So here's a flashback for you, Bob. Powell says he was asked about a 50 basis point cut. Not something we are thinking about right now. The last time he said that was in 2022. Markets were heading lower. They asked him about, I think it was a 75 basis point move, Bob.
Yep.
And he said, no. Remember, this is when they were hiking. He says, no, not happening. And the market went up strong. It was one of those bounces that we got even though the 2022 is largely down, we were getting some very strong rallies. Market started ripping up, and they came in and gave us a 75 basis point cut or hike. So when they say it's not something they're thinking about right now, it doesn't mean anything. In fact, I would say that it almost guarantees that at some point we're going to see a 50 basis point cut in the next 12 months.
For sure.
It's almost code that they say the opposite.
I went ahead and I bought CrowdStrike calls for the 16th of August. So whenever you get these gap downs like this and price starts to consolidate, any momentum should give you a buy. We did a trade last week on this. It was pretty good. I'm back in it again today. So if that's your Huckleberry, I think that's a good trade.
I would watch for, if we do get this flag to break out and we do get this move up here and we do fill this gap, I would be leery of this being somewhat of a bull trap, actually, even though we've gotten the dovish reaction that we thought we'd get from the Fed in terms of what they're saying. And I think by and large, that's what the market wanted. But sometimes they have to kind of resolve and consolidate a move before you get to go higher. And like I said, 20 SMA typically rejects. I showed you guys that on the chart on the first retest. This would be the first retest. I mean, we've gotten within a few ticks of it. On a daily chart, it would look like we've hit it already. So like I said, don't be surprised if tomorrow we don't exactly just blow through here. If now that being said, if we do blow through here and we have a large daily candle over it, do not short this market because this market is going to absolutely rip.
Yeah, I think they're setting up for it, Phil. He's signaling to his buddies in Wall Street, you better pump this market so you guys can get out.
Yeah. Yeah, I think it's as simple as that. All right, is Mr. Fed done talking? He is still talking. So we can still have volatility. And sometimes too, guys, they will coil like this, and then when he's done talking, you'll see another release. And in this case, I would be looking for that to go up. But then later tonight, when the futures reopen, we could see some profit taking and then some consolidation of this whole move. And we might get a red day candle tomorrow. That's going to be your rejection off the 20-day in that case. But I wouldn't, don't overthink that. I don't think we're going to go back down. I think we're going to just consolidate and then attack the 20-day again and then poof, make a gun higher. As you can see, this market's very slippery. It can move a lot. You can have 100, 150 point days. So we can be back to all-time highs very, very quickly. So again, we have a bit of somebody's holding the price down here, right in this area. You can see where we wicked down on it, we broke through it, and now we're wicking back into it. So we've got to break this 55, 80, 81 level. You see how they just continue to push down on that. So once we get a break up over that, and you might see a quick wick back down to it once we push back up over it. And then if they hold that, likely we may see this finish off. Okay, now they've touched that previous high. And we're dipping back under it. So this is looking like an initial reaction. Now, because we're losing the flag here, so that structure is breaking now. And this is why you got traders stopping out here. So that setup is invalidated. Now you're coming back into the reaction high, which is now coincidentally 50% retrace. We'll see if that holds. I don't see anything in his comments that specifically would trigger a negative reaction like this. Powell on creating a central bank digital currency, CBDC, not something that comes up at all in the FOMC. We need to go to Congress. We have no plan to do that. No one here has decided that we need to think about that or that it's a good idea yet. So they'll probably introduce it next month. All right, we're breaking the reaction high. And if this continues, we will back test that announcement. You basically want to see this hold, right? We had that initial pullback there, right? We talked about that holding, and that got us up to the 20. You really pretty much, at this point, you don't want to see a move back under where the announcement was made. That round trips that entire move. You want to see this hold now. Because otherwise, like I said, this turns into a rejection at the 20 SMA. You don't get that gap fill. You'll get it later after they decide to pull back, consolidate for a day or whatever, and then push higher. So that's a real issue that we have to deal with here, that potentially that was it because of that. Because this is, these are daily levels, right? We're watching this on a 5-minute chart, but really, these daily levels are huge. So sometimes you're going to get to it, and this is what I would call very clean rejection. Sometimes you get over it, you overthrow it a little bit, and then it rejects, which is more often than not the case. But all is not lost here. This is, because we're just pulling back into this range. So this is actually not invalidating the overall reaction yet. Okay. If this holds, we can be right back up to these levels.
Day trader profit taking. So Phil, the rule tomorrow is we inside day and above the midpoint of today's range, and then it's going to consolidate for a higher move. If it breaks out again tomorrow, then we're on a jailbreak for the next 2 weeks.
Right.
So
Russell liking today a whole lot. Crypto and Russell actually have been really hand in hand. And Russell looks like it's got just an absolute monster move brewing. All right, so what the bulls need to do here, guys, is get back over this previous swing high. You can notice we've got right up to it, to the tick, and what did we get? A pretty swift reaction back down. So they have to break out over that. If they do, then we probably have a decent chance of reattacking this 55, 80, 81 area, which was, they were just sitting there. If you guys notice, right, wick after wick after wick on the 5-minute, they were just sitting there selling into that, and then you get your break. Now, question is, and this is a legitimate try on a bid here, but the question is, does this hold? And now we come back up, and this would be another ABC move, A, B, and then C, to try and attack and get this upper level. We don't know yet, but that is a potential setup. And so far the reaction is saying that could certainly start to play out here, but we got to get back above that prior swing high. If we start trading below the announcement, then the reaction low could certainly be tested, and then this swing low down here prior to the announcement at 55.39.75 becomes a magnet as well. That, my friends, would be somewhat of an outlier move, because normally, like I said, once you break one side of the reaction range, that's usually where you're headed off. It's not uncommon to see a pull back into the range to clear some stops before heading higher. So bulls are looking at this to hold. Bears are looking for this to break down under the announcement level, which was 55.75. So traders see 70 basis points of Fed cuts this year, up from 64 basis points earlier. So they think more cuts than not prior to today. which means that the interpretation from Mr. Powell was a dovish one. Iran's leader orders attack on Israel for the Haniyeh killing. Do not like the reaction we're getting here off of that previous swing high retest. There's just, and anything is just getting really pushed down. So now we're going to test this announcement level and see if that holds. We just hit the 618 retrace of this move. There's the announcement level. So that entire move round tripped, that whole thing. It's not looking that great for the bull case at the moment. Big negative ticks are coming into the market, meaning that there's some broad negative reactions going on. So again, either this holds, we're going to run back up here after he's done talking, or we're seeing the start of a 20 SMA reaction, rejection, I should say. And that's probably going to give us quite a bit more lower if that's what's happening. All right, he's done talking. So what that means is this market can continue to push up. If it doesn't push up now that he's done talking, we got issues. Iran's leader. No, that's all right. We already said that. All right, so that's it for the Fed. He's done talking. Now it's a matter of the last 30 minutes of this market, and we'll sit here and we'll see what we get in terms of the price action here. So bulls are holding the announcement level. That's got to continue to happen, and you have to get back above the reaction high and that previous swing high. Otherwise, we're going to see most likely the reaction low. Maybe we hold in this level here, but I kind of think we're going to see a reaction low, take out, and then you're going to take that swing low out. We're not getting they were pulling back into the tail end of his speech, and we're not getting a reaction after he's done talking. So that's actually quite bearish.
Peterbilt trucks in their factory in Denton, Texas, told people to stay home next week. Not enough work on the assembly line.
That's why it was really important for that bull flag to continue to fill out and then break higher. This 55.80 level is going to be an important level in the future if we get back up there. But once that flag started to break down, there was just no bid in this market. It's just all selling now. Sell, 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 sell. Which is not good on the last day of the month. You're not even getting an attempt to hold up the window dressing. So and there is our range reaction low, which we took out by a tick or two. And there's a break in that. Now, can you sweep that and go back up? Yep. But you really don't have much of a bull case unless you start getting back above the announcement level. This is what we call a very deep range retest. We may back test this announcement level here on this move up. That's going to be a key reaction to watch. So right now, the bears are rejoicing because it does look like a rejection, a clean rejection off the 20 SMA so far. That doesn't really confirm until, tomorrow you see a red daily bar. But so I mean, this still could come back up into the close, right? And try to reattack the 20 SMA. It's totally plausible. But right now, it's a really good setup for the bears to take this back down. That's why it's important to monitor these higher time frame moving averages.
We had a heck of a move today, though.
Let's see what Mr. Bitcoin's doing. Same thing, Bitcoin's giving it up. So markets aren't happy. They don't like the press conference at all, even though he gave the markets probably what they were looking for. So, especially on Bitcoin, that's a failed move. There's no breakout at all going on here. So I don't know, Bob. You might be down for a couple days. Bulls had it. They were off to the races and completely fumbled the ball.
Yeah. I think they front ran this thing so hard though today.
Well, I mean, if you zoom out on the chart, this was largely a move down into the FOMC. Now they did rally up in the last 24 hours, correct? But
Yeah, we have a daily bullish engulfing pattern, Phil. I expect tomorrow to be an inside day and consolidate these gains. And then to me, what happens Friday is more important. So if Friday we stay inside again, then wow. But if Friday we break up above the Wednesday range, then we're in for a jailbreak. So
yeah, if what Bob's saying is if we do consolidate here under the daily 20, then that probably means that we do see a breakout over it. But I mean, obviously, we're getting our reaction first here, get off of it.
yeah, I'm not saying you're wrong or I'm right. All I'm saying is that that's what I'm looking for. Thursdays after a big up day is almost always a consolidation, unless we're starting a new bull run.
Okay, so it's 332. Now, a lot of times, guys, what happens is you get a reaction off of 330. That's what we're seeing here. We're back off of the back over the announcement level, which is good, but not great because we took out the reaction low, which is a bit of an outlier considering the strength of the move up. But we did run into a big moving average as well, so you have to respect that. But when it comes to 330, oops, I don't know what that was. I hit the wrong button. So what you do is you look at where 330 opened. So 55.49, basically this red line, right? So around 55.50. So what happens is you'll get a move. This is a 1-minute chart. You'll get a move away from the 330 open. And a lot of times it'll come back down to the 330 open, which is kind of what we're seeing here. It just happened really, really quickly here. Now, either it will hold the 330 open and go back up, or it'll come to the other side and you'll get a push down the other way and then come back up to it again. If you don't get back to the 330 open, that only happens probably 10% of the time. In this case, if that happened, that'd be really bullish and it could lead to quite a bit of a move higher. So these are just some of the end of day antics that go on in the market.
Yeah. They do make life easy on us, Phil. If whatever Nvidia and SVIX does should tell us where the market's heading.
Yeah. Gunlak thinks he's a fun guy. He thinks they have 150 basis points of cuts coming, certainly in a year from now.
I'm with him.
And he says Fed should have cut today. I would say that he's correct about the cut today because the Fed is late. It's very obvious to me that the jobs market is done.
Yeah.
It's actually pretty bullish here. You're going to see a bit of a squeeze now because we're breaking over. See all these little wicks on the 1 minute? You know, these are guys selling into this. So now these stops that just got hit. Now, is that it? And it's a trap, or does this continue to push? If it continues to push, remember we're going to get back to the reaction high here. So this is the next level, 55.64, that we could see bears try to swat this back down at. But this is bullish. This is very constructive. And a rescue move would be you got to get back up to where this broke down, basically, to try to stick save this. There's your reaction high. Let's see if they push it back down here. Otherwise, there's going to be a lot of short covering really quickly.
Yeah, ExxonMobil just popped.
Let's see if Bitcoin's feeling it. Yeah, Bitcoin's wicking back up. Could have just been a big flush to clear out stops, possibly, but you got to start pushing over this reaction high. Right now, it's rejecting. There's your rejection at the moment. If this does not get back going higher, they can push this all the way back down and just undo this entire little squeeze up real quick. That's why these levels matter in this range after the FOMC announcement. So this area that was resistance, you want to see a reaction there, back up. Not getting it. Looks like they're going to round trip that move. Unless the announcement level holds, it could, but not. This is not what you want to see. The bulls should have started to blow through that level, so they kind of blew it there. Announcement level absolutely has to hold here. You're probably going to get back to that 330 print.
Bill, the 2-year is the lowest it's been in 6 months. I think that's also what you're saying too. The 2-year should be where our Fed funds rate should be.
It means that we're going into a recession because yields always start to dive down before the recession by a quarter. They just start heading down, heading south for the border. Okay, so this range has to resolve reaction high and announcement level. What would be extremely bullish would be to take out this little short squeeze high that we put in up there. Otherwise, we're going to go back to this red line, which is right around that 330 print, around 55.49 or so. So we got a little box here that needs to be resolved. Just not seeing, just the follow through on the market because we're getting negative ticks that are coming in. So we're not seeing like broad follow through on the bidding here. We do have, we're not there yet, but in 12 minutes, we have our end of day algos that fire off buy programs or sell programs. Those happen at 10 till and 5 till 4 p.m. So we got about 12 minutes till the first one, 11 minutes till the first one. Those can sometimes, finish us off into the day if they're strong.
Crazy Kamala is trending on Twitter today.
I am going to get something to drink, and I will be right back.
Let's keep an eye on things here. Yeah, I think we're going to see oil moving up. I have a feeling oil fields are going to be at risk here. You'll see the Fed cut in a heartbeat if any of these oil fields in the Persian Gulf start lighting up. SVIX climbed back over 44 again. ExxonMobil's back to 119.40. ES is back to plus 93, 94. So good chance we're going to close on the highs. Remember, Japan raising interest rates and oil going up is not long-term bullish. So whenever this move starts to peter out, I think it's it. I don't think we're going to make all-time highs, personally. So, but there's a lot of room between there and here to make some really good money in the next couple weeks. Then it's okay just to sit back and not trade like a maniac. Get defensive.
Well, the bull said, "Hold my beer."
They did. Phil, go back, get another drink.
What's up?
Go back and get another drink.
No, this is, I mean, this is what you call a stick save. I mean, they went to the absolute lowest area that you could really get to and try to get some sort of reaction. They are doing, the Bulls are doing everything they need to do to save this so far. They got to hold this reaction high, in my opinion, but so far they made another high. You got another 8 minutes until the end of day algos fire off. So right now, 1 minute trend obviously up. So far, the reaction high is holding. Now you got to get back and take out this previous swing high. That was our big failure, right? Big failure there. So that would round trip that entire sell. Very volatile reaction so far because we've banged, just absolutely banged both sides of the range. But if we do get back up to these levels, and especially if we get back over 55.81, then I do think the overthrow scenario gets our gap fill. I absolutely would think that if we get back up here. You can even draw fibs the other way. So we just tagged the 50, right? This is kind of like your golden pot. Well, actually, let me change the template. So this is going to be short. All right, so here's your golden pocket if you're a bear. You get an initial reaction off of that, right? But they're pushing right up into it. I don't think it's going to hold. I think because we're getting a V reversal in this market, and you get a V reversal, it's just you're going to get your face ripped off. They could hold here, but, it's not looking great. You do have, now this does coincide with this area here that was holding up and holding up and holding up, and then so you could still see a negative reaction here because of all these little 1 minute wicks, right? Around 55.73. So we could see a little bit of a battle here and a pushback. So far, a good reaction though. Shorts are forced to cover. So there is some attempt. You can see the way that the price paused there. There was some attempt to short that. And it's more than likely that little spike there is stops having to get hit. But now you see how these 1 minute candles are acting, right? Just green, 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 green. That's what, you know, we nicknamed that the algo walk. And that's just because now you've got buy program and short covering going on. What's gold doing? Go over to the gold futures real quick. Looking great. Same thing. Nice positive reaction off the 1 minute. Grinding up. Very aggressive. Let's see. Bitcoin. Not grinding up. So Bitcoin not following along. Interestingly enough. Bitcoin's correlation with the markets have been just completely off lately. Yeah, this is not happening. That'll make Peter Schiff happy. So we start clearing this level here. We're still battling right into these lows. But we start clearing this level above these wicks here. We're going to get into this, I think is probably the most important level now, is this 55, 80, 81 level. And I can even switch us to our more deeper retrace zone, which is this. That's kind of like what happened on the downside. We got into a really deep retrace zone and then bounced. So if these wicks, this low here doesn't end up rejecting, which is what we're battling through right now, then the next big reaction here is at this level. And then if that breaks up and we take out these highs, then I think you overthrow to the gap fill. If this pulls back, the bulls want to see this reaction high hold here. You're getting stops hit because people more than likely had stops under this previous swing high, under this wick. So these guys got flushed out. If this doesn't hold, you're going to round trip back all the way back down to the 330 open at 55.50 or so. And that would be very bearish because that's 2 times now bulls had an opportunity, had the momentum, had the levels in hand, and failed. So the bear is too powerful. Okay, we got about a minute before that 50 algo fires. You're welcome, Derek. JC, typically when there's an initial foray into a conflict, there's a knee-jerk reaction lower, but it's always bullish. 100% of the time, markets just will bid up conflict. So if this expands into a larger regional conflict, again, there could be a knee-jerk reaction, but ultimately these markets are going to bid week after week after week after it starts to get entrenched. So that's just a historical fact. Okay, 50 algo in 3, 2, 1. See what the reaction is here. Looks bullish to me, boys and girls. Reaction high is holding so far. That's what the bulls want to see. They got to take out this high, right? Because we have this. Remember, we got these lows here. Obviously, big resistance. Now, if they can actually push up and break out through that, that's a change of character because now we're making a higher high over some key resistance. Okay, the next algo that fires off is going to be in 4 minutes, and that's the one that fires off 5 till, and we'll see if what direction. A lot of times those will have like an opposite reaction. They just ate back that entire push up. So there's, the selling in here is somewhat aggressive, and you go like, well, why did it push up to that level? Well, that's where you have this resistance, obviously. So there's a big bear, up in this area, up in this 55.73 area. So two key spots today is the 55.73 and the 55.80.81 spot. But I mean, that's just a heavy sell there. The whole market's selling right now broadly. And so bulls had it. Great opportunity there. Just getting obliterated. Throwing the game. And you got to watch out for this return trip back to 55.50. So that's why getting and making a new high there would have been a change of character, but they prevented that from happening. That was never going to happen because somebody was up there with some size and just absolutely bombed this market. I mean, to drop the market that quickly down, right? Because you were at 55.70, you're in 1 minute, you're down to 55.57. It's a 13-point drop. I can't even tell you guys how big of an order that is to initiate a move like that. I mean, you're talking hundreds and hundreds of millions of dollars. And here comes your round trip back to that 330 level. So massive failure by the bulls there. Second big failure by the bulls. So the bears now have all the momentum. They can absolutely just get rid of this thing and break us down out of this purple range, which is going to be really key that we hold this. Now, if we don't, then we're going to start probably back testing all of these big moving averages that we have here, the daily 50, the weekly 9, daily 9 EMA, like there's a cluster of averages here. So would not be surprised if we do see somewhere between 55.20 to 5500. You could see a back test of that if we start breaking out of this purple area. We got 1 more minute and we'll have another algo fire off here. So I would call that pretty much mission accomplished in terms of what we call the 330 round trip. So you have your 330 open. You're going to get a move away from it and then a round trip back to it. So this was a more exaggerated one because it's FOMC day and volatility is very high. Usually it's not this pronounced. Usually the move doesn't get as far away. But that's typically, very textbook stuff that you see. So we call that good, and we'll see what the 55 algo does and then see what the last 5 minutes of the day does. And then that's it. And the takeaway would be that the 20-day moving average rejected. The question becomes, do we lose our range up here? We start trading below 55.40 overnight into tomorrow. Then that opens up a larger move lower. And, we can backtest down towards 5,500. a really nice bid off that 330 round trip. Here's the 55 algo. That's this candle going up right now. Extremely volatile here, obviously. I mean, we're moving. These moves are not normal. These are big moves for 1 minute candles. Killing my lighting setup here. All right, there we go. All right, so battling the reaction high here. We got about 4 more minutes. Personally, I think that there's probably going to be some resolution of this rejection here, and I think you have to watch for some downside. Uh, Bitcoin, yeah, Bitcoin's just not. I think Bitcoin's kind of telling us that this isn't a broad market rally move here. We should not be taking out 65 as we are here. Maybe Bitcoin just wants to take out the daily low, the daily envelope low. We'll have to see if we get a reaction back over it. We were doing good over the Monday low, but again, bulls can't seal the deal. So a lot of profit taking here. So we'll see. Interesting end to the month. We need to see a very bullish next 2 weeks to kind of keep hopes alive for a blow off move. Otherwise, who knows? Maybe we saw the top in the market. Getting back above that 20 daily SMA is going to be really important. But right now, the bears, I would say, are in control. You really don't want to see taking out the reaction high, doing what we did there. You really don't want to see the reaction low get hit. That's not bullish. And so when we did get that, all we did was we retraced back up, right? Get into this prior resistance here. And it's just unable. 2 times it tried to break through that, and both had very negative reactions. So there's definitely some bearish control going on here. So I think, for me, I think you have to see markets get back over this 55.80 level because there was just so much going on here, right? The bulls we were flagging on that, and then it's very clear to me that they initially tried to hold it, and then once they lost it, some big entity was up here selling, and then they lost it, and then it finally sold off. So 55, 80, 81 on the futures, that's a big level to get back over. Overnight. Otherwise, bears are in control as we close out the day here and go into so there's going to be 1 more hour of after hours on the futures, then we close for an hour, reopen the futures at 6 p.m. Eastern, and I'm not so sure about a green day tomorrow. We'll have to see. That's to me, that's the biggest level right now is 55.80. This is kind of a show me the money market right now for the bulls. Otherwise, like I said, we got to watch losing this area, this 55.40, and then boom, you're going to have some empty space back down to these larger moving averages. But I would be interested in getting long down here if that happened overnight.
Yeah, tomorrow they have to hold the midpoint of this move.
They have to what?
They have to hold the midpoint of today's move tomorrow.
Yeah.
So, but All in all, though, it was a good day. So, they didn't end it strong, but we all made pretty good money. So hopefully you did.
I think it goes higher. I think you're gonna. I just think that we're just hitting the technical level here on the 20-day. I would look for this grouping of averages between 5520 and 5500 to hold if we do get a move down there going into tomorrow.
Yeah, I gave it back about one third of my gains just with the market exhaling, no
Mm-hmm.
trades. I didn't put a trade on. I put the CrowdStrike trade on late, but that trade's pretty flat. But other than that, everything just kind of softened into the close. I'm a little disappointed in the Bitcoin action.
Yeah, that tells me there's really not. That's why I don't think we're gonna push up in the on the indices. I think that we pull back to those averages.
Yeah. Well, we're in for a wild ride, guys. This is really interesting, so we're gonna definitely have to be on our toes on these trades from now on. But I mean, the biggest bright spot has been energy. Energy should not be at these levels. They should have been drifting down here, but the geopolitical stuff just keeps propping it up. So anyway, guys, I think we're gonna wrap it up. Did you guys like the show, or yes, no, maybe so, or um, just interested in your thoughts?
Yep. Um, so we'll see. You got the levels here. You got a couple levels above us that are key. That if we're gonna go higher overnight, those are levels we want to see clear. And like I said, you got the big 20 SMA up here, 55.90 on the futures. You got the futures gap fill. It's 56.02, which is what, about 40 points higher. That's ultimately our target to the upside, but that's not happening as long as we are, trading. I would say as long as we're trading under 55.80, that's a major level. I think that needs to get resolved. We get back over that, and then I think you can take a shot and potentially an overthrow of the 20 SMA in that gap fill. But I still wouldn't declare victory there because I think you could get basically an overthrow move, right? And then a rejection back down for a bigger sweep of all of this action. There's a lot of liquidity sitting down here that can be tapped. So we'll see how it goes. We'll catch you guys on the next one. We'll be back at it tomorrow with another podcast. Thanks for joining us today, guys. Have a great evening.